by Kane Capital. Excited to be back for another week of trading. Hope that everybody had a phenomenal weekend. We're ready to go. Hope that you're ready to go. The S&P futures are up about 25, leading into what will hopefully be a little bit of a quieter week in the markets after some aggressive volatility following last week's FOMC. Economic calendar isn't nearly as stacked this week. Good thing or bad thing, you tell me. To talk about what we can expect, we've got an awesome panel with us, starting with Money Mander. Money Mander, good morning.
Good morning. Happy Monday. And definitely a good thing. I think we finally get some relaxed price action with some trend continuity this week.
Agreed. There were a lot of outside factors to take into account last week. I think that traders will, at the very least, be relieved that we won't have a bunch of outside forces moving the market quite as much. All right, Diamond Trades, good morning.
What's going on, guys? Hope everybody had a great weekend. Like Alejandro said, this week is actually relatively busy in terms of news, but none of it is too high impact. We'll get into that in a little bit on Fed forecast.
All right, Moe Mamba, good morning.
Good morning, brother. Yeah, I'm with the boys on this. I think the past 2 weeks, PA has been horrible, toning down the trades a bit. I'm looking to pick up the number of trades this week, of course, with high-quality setups, but I'm looking for a great week of PA this week. Let's get it.
Nice. All right.
What's up, my man? Yeah, definitely some choppy price action last week. Looking forward to see what the market gives us this week. Let's get after it.
What happened to the beard, brother?
Hey, man, it was time. It was I started feeling myself a little hunchback. You know, the weight of the beard was kind of dragging my chin down. So
it was pretty legit.
We got to keep that posture, man. But yeah, It is a little weird looking in the mirror right now.
You look good. Let's go into Fed forecast, economic calendar with Mander and Diamond.
Yeah, for sure. Let's start with the economic calendar. So like we mentioned before, we actually have a decent amount of data points coming out this week, but none of it is really going to be super high impact. I think the most important thing this week will be a sneaky testimony by Fed Barr, Vice Chair Barr, Tuesday, Wednesday. I think that'll probably be the most market moving news that we get outside of Michigan consumer sentiment, which is going to be on Friday. We also have core PCE numbers coming in on Friday. And then Thursday, those GDP growth rate numbers and the corporate profit quarter-over-quarter numbers, those are going to be preliminary numbers, whereas the Michigan on Friday is going to be a final number. So a bunch of small data points just sort of littered throughout the week. Again, nothing really too high impact outside of that Barr testimony and the Michigan consumer confidence on Friday.
I'd agree. Fantastic. We'll take this right over into Ryan, if you could pull up our unrealized losses by bank. So I wanted to piggyback on our Friday segment here, and we finally got some great data to back. We were discussing the kind of current balancing act between the Fed and really their tackling price stability target, and then the financial system liquidity issue that they're obviously facing. And so the one thing I noted from the press conference was, while everyone was saying the possible pause statement from Powell was really bullish and ran with it, really what he was saying was that financial conditions may tighten on their own without monetary policy needed. And this is why. If we look here, banks nationwide right now are sitting on over $500 billion in unrealized losses in treasuries and securities, because for the most part, they don't have to mark a lot of these to market. So they don't have to post and realize these losses on their balance statements and financial documents that they're posting, right? And so they're sitting on over $500 billion of unrealized losses, where really if we get continued fallout throughout the financial system here, financial conditions are going to tighten on their own, because if these start to roll off and get realized losses, or if they get into liquidity issues like we saw in SVB and Signature, people are going to quickly kind of get into this cash under the mattress ideology, where if confidence in the financial system falls out or is not there through depositors, that's really going to kill your demand side of the economy on its own, right?
You know, I think that's a great point that you bring up. I mean, you look at one of the things that we pointed out going into, well, I guess after the fallout of Silicon Valley and First Republic, is how involved a lot of these regional banks are in the commercial real estate space. So Ryan, if you want to pull up the commercial real estate chart, a lot of unrealized losses, particularly in the sector, are coming from the commercial real estate debt securities, right, which reached unrealized losses of about $43 billion last quarter, according to FDIC data. So banks hold about $444 billion of these commercial real estate securities at the end of 2022. Right now, landlords are under pressure as businesses sort of scale back on space because employees are working remotely. So you're seeing these office space vacancies that are actually expect to continue to rise throughout the rest of this year and even into next year. That could also put some pressure on these regional banks. If your commercial real estate landlord is not bringing in as much cash as possible, it's not going to be quite as easy for them to pay off their debts. And a lot of these commercial real estate debts are at these regional banks, north of, I believe, 40% we saw last week in the journal. So this is definitely something that we're going to have to watch going forward, particularly in this sort of regional bank space as things get a bit tighter going forward.
Yeah, I think it's important to mention too that the FDIC is technically only insuring $250,000 per account, but I think we're all kind of in consensus where if that became an issue, they would ultimately probably bail out all of the deposits regardless of amount. But I think it's important to say here that that doesn't really fix your confidence in the financial system, right? I think that's still, $250,000, $1 million, even if they raise that publicly. I still think that if this starts becoming liquidity issues across more and more regional banks, that doesn't fix the issue of depositors wanting to pull that money out and put cash under the mattress. And before we wrap up here, I wanted to take a look because we've been saying this for a while. If we start to get a pivot from the Fed before price stability is achieved, it's likely because something cracked in the system, whether that's the financial system we're seeing here or not. And so over the past two bear markets that we've seen since the turn of the century, in December 2000, we got our first cut prematurely after a 6-month pause, and the index continued to fall another 41%. And then in August of 2007, we got our first 25 basis point cut after a 1-year pause at 525, kind of a similar position that we're at right now. And the S&P still continued to fall 56% over the next 18 months. And so the Fed is definitely in this tight balancing act between price stability and the liquidity of the financial system. But I don't think that this premature pivot before price stability is achieved is really this bullish narrative that everyone is running with. But that's going to wrap us up here at Fed Forecast. Back to you, Alejandro.
I love those charts, Mander. I'm glad that you were able to pull those up and give us a good visualization of exactly what's going on. Let's talk about the system now, everybody. So the picture going into this week is pretty interesting, okay? So on the hourly chart, we recovered the 50 SMA, and that 50 SMA is in a pretty strong uptrend at the moment. As I mentioned earlier, the S&P futures are up about 26 points right now. So it looks like we're going to open up green on the day, which would put us above the 50 SMA on the 30-minute chart. So this is really interesting. Right now, the 50 SMA is flat. There's no sense of direction in the market. And this is a lot of what we've been seeing recently, right? Especially coming off of FOMC last week. It was just very difficult to get any day-to-day trend, right? Trend carrying over from one day to the next. However, intraday, we've been getting some really solid moves and some pretty solid volatility that traders have been able to take advantage of. Now, I'm interested to see if we can break over the 50 SMA and hold and start to put in an uptrend over this 50 SMA because both the charts would be telling the same story. So now, big picture, zooming out, I'm not just going to jump in long. I obviously have my setups that I'm looking for, but short term, if we can start to trade over the 50 SMA and we get that buy signal, we could get back into an uptrend. We could put last week behind us. We talked about earlier on the show how this week the economic calendar is kind of clear. And so hopefully there's an opportunity for price discovery. And if we open above the 50 SMA and if we start trading above the 50 SMA, I'll be short-term bullish, and that's that, okay? And I'll be looking for trades and opportunities to go long. Now, of course, if we don't do that and we break back down, we're going to be watching for the break back down the 50 SMA on the 1-hour chart. Very simple thought process there, okay? But I think that there is an opportunity for the market to make a strong push higher as long as we can break over the 50 SMA and get the buy signal. So that's what I'm going to be watching for today, and that'll be my go signal to look for opportunities to trade long and to hammer setups to the long side. So it could be a fun week of trading for sure. Okay, that's going to do it for the system. I'm going to pass it over to Ramsay Rippers for Bet the Bell. do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. All right. Good morning. No surprise. Let's do it. Pull up the stats, Ryan. No real shakeup last week. Everyone was wrong. That was on the show, choosing red last week. I mean, it was looking really good, right? We closed Friday at 393. Shortly after the close, that 950 candle, we tapped low a day, 389.40. It was looking really good. And then just a slow, extremely slow grind up. We closed green. So clean slate. Chart looks good. We're ready to go. The S&P is up a little bit over 0.5%. What do we got today, Diamond, green or red?
I will go green. I think that we hold on to this gap up before the close.
Yeah, opening up. If we were to open right now, right about 398.5. Mo, what you got?
I got green. Green. Yep. Gonna get some upside on this market.
Mander, smirking. What
I am, just because we take the same things every time here. I was going to take green either way, but yeah, dollar red, VIX red. I'm going to say we hold on green today.
Hondo.
Green. Definitely green.
All right. Next question, Ryan. Pull up the QQQ chart. This is more of a weekly question, not really by the end of today, but there's clearly some massive resistance on the daily around this 313, 315 area. Last week's highs, I believe, were like 315.5, 315.25. Back-to-back rejections. It kind of looks like a double top right there. Nice reclaim. Looks like we're gonna test and actually might be taking that out sometime today. QQQ a little bit weaker with respect to SPY. Trading right now in the pre-market at 312. You guys think that we pass through this 313, 315 double top resistance this week and start climbing towards the 320s, 330s, next resistance spot on the daily, or are we in for a pullback this week, Diamond?
This is a good question because if you look at the QQQ chart, we took those February highs, so the year-to-date highs that we pulled back off of at the beginning of February. QQQ last week during FOMC got a pop right above that, grabbed some liquidity, sold off. If you look at the NQ chart, I don't believe that it is taken that high, which makes me think that we might get back up there. So I'm gonna go with break it. I think that we can get through that at 350 or what is that, 313.85. I think we can get through it.
Mo.
I remember that this question last week, actually. Or were we going to break that high? And your 15 and 20 guy told you we'll break. We won't hold it, though. We'll close below it. That's what happened last week. I'm with Diamond on this week. I do think we break it, and I do think we hold it this week. So, but getting into 315, yeah, I'll take it as well. I do think we come up into that level and break through it this week.
Interesting. Mander.
I'm kind of Diamond's opinion on, I think we get a pop above it, but I don't think we hold this into the end of the week, and I'll cover that more in the next question here. But I think a pop over and then close that week below it.
Hondo.
Yeah, I think that we're going to break through it. I shared the system chart earlier, and as long as today is a green day, I think that's going to set us up for the rest of the week.
Gotcha. Our last question, we usually don't do this. I want to know green or red on the week. And so, Money Mander, why are we going to be red this week?
Okay, well, we can't go up. We're going to be red is my guess here. I can't give you statistics on the why.
Elaborate, because you were saying that you would elaborate on the next question. So green or red on the week, what are you thinking?
Red.
Got no thesis.
Yeah, no, I'm just gonna go red. If I'm gonna take one,
He
of
just
the
hates
other, I gotta
stocks.
lean red.
He just wants to see people lose money.
Some men like to see the world burn. Hondo, what do you got?
I'm going green because of the system. I have a solid thesis there.
Mo.
I'm gonna go red end of the week. Red week.
Yeah, big spot on the daily.
I can already see it. Ryan's going to make a montage of me saying green because of the system. Then it's going to be Mo saying red. and it's going to be something about no mercy for anybody who fades the system, and we're going to plaster Mo's face all over fintwit.
We'll see about that. You guys remember this, huh? You guys remember this Friday?
I will go. Oh, I'm gonna go red for this week. I think the weekly candle is gonna look pretty gross. I don't think it's gonna be like a trend week where like we open at the lows and close at the highs if it's green, or open at the highs, close at the lows if it's red. I think it's gonna be like a doji candle in the weekly indecision, because we don't really get any like serious news this week outside of the testimony, which I don't think is really going to move markets like that. So yeah, that's my guess. I'm gonna go green, but I think ultimately we're gonna have like a doji, I'm sorry, I'm gonna go red, but I think ultimately we're gonna have a doji candle at the end of the week, and it's gonna be like pretty indecisive price action.
Gotcha. Yeah, last week's weekly candle, I mean, still was not the prettiest candle, but it was looking really nasty Friday morning, looking like a absurd shooting star.
Right.
Inverted hammer, but we closed the week green. Yeah, so it'll be interesting. We'll see what happens, guys. That's going to do it for me and Bet the Bell. We'll pass it back to Hondo here.
All right. Ready to hear Mo's thesis? Mo, Mamba market analysis. Let's do it.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. All right, guys. So really simple. SPY daily time frame. 2 trend lines we need to be paying attention to: the lower and the upper. This was one we hit on last week, and we had said if we do make it up, if we do get a move up, it'll be into this trend line, potentially into this daily supply up here. And if we do break and hold, of course, we got the move into gap fill. This 408.3 still has not been filled. So what I'll be looking for again is this upper trend line. Now, you see this lower trend line, we did break through it, but we never held it, right? Important that you do hold your levels, you do hold your trend lines, break and hold. Lower time frame, higher time frames has to hold, right? We gapped down below it, guess what? We closed within. What's that indicative of? Further upside. That's what we're seeing today. A nice little gap up. And now I'm looking for a move into this trend line. 400, of course, is a big psych level. You watch for that, but definitely do think we will hit this trend line test if we do break and hold. You do have to watch this daily supply up here. We might see some chop up here and then maybe fall back through end of the week, or we just straight shot into this gap fill and then we fall through end of the week. That's what I'm seeing for the overall week, but of course we'll take it candle by candle, day by day. For today, what's our target is this upper trend line on the S&P. That'll do it, Hondo.
That's going to do it, guys, for this morning's show of Beat the Bell. We are pumped to do some trading this week. Hope that you are as well. We'll be trading live all day, every day in the Kane Capital Discord. You can go to kane-capital.com. We got a 7-day free trial going. Come trade with us. It's a lot of fun in there. Other than that, trade smart, manage risk, and we will catch you guys on Wednesday morning at 8:30 a.m. Eastern Time. Have a great week, everybody.